All right. So you said USD, JPY.
Oh, so, okay. So you like starting on the monthly first?
Well, just so I can get a really big picture. So then, like, I'm gonna say from low to high.
So while you do that, I have a question.
Go ahead.
So like, one of my problems was like, I wouldn't know like which imbalance to go off of. Like, say if you were to go on like the daily, and then on the daily, it'll be like you'll see like two imbalances. You know, like one in like the middle and one all the way, someone at the bottom of like price. Like, what do I still like mark those up? You know?
Mm-hmm. Like what I is, for example, price is right here. You mark up the imbalances close to price. So there's a little bit, wait, let me see. Because you see how it came down here? It kind of filled in this imbalance to the T. And that's what it does. I'm gonna go about right. It's the last down candle before the up move. Look how it just came in, swept that. It's the last down candle before the up move.
Yeah.
And right back down to fill it in. Now, it can still come down here. So you can still be in for a sell with this pair. But, you know, we'll see, because right here would be a better percentage. You know, banks like percentage, they like discounts. So a good discount would be like the 886, the 786 in this area right here. And then you see what is this right here?
Imbalance.
A lot of imbalance. So it has a good incentive to come here, but it just depends on how strong the support is, because there may still be a lot of buyers in the market, because they were able to push it up, you know, but this wasn't able to break this high. So now it's kind of consolidating down. So we'll see it. Like, I honestly will just kind of see if it breaks this low, because look at this long wick for the monthly. So let's go down, keep analyzing
Did it? It looked like it just created like equal lows right there.
right here.
Nah, that big wick.
This one.
Yeah. Yeah.
Yeah, I did. So knowing that, you know, price have more incentive to come here, because you got to find your target. So you know price has more of an incentive to come down here. So what I would do is I'm a whole shift so it can stay equal. And then I have a little I thought I had. So this is where their money at. So you know prices want are gonna come down here to get those equal lows. And
Right.
so it may break through support and go all the way down here. So the weekly is telling me that I'm looking for some sales, because the target money, that's how you know where to go and what imbalance to look for, because you want to look for the money, equal highs, equal lows. That means that somebody's stop loss is sitting right here, somebody's stop loss is sitting right here, and they want to go and get their money. Let me see how many pips it is. So yeah, that's a good 200 pips to that area. That's easier than coming up here to like this support, you know, because this is definitely liquidity.
Mm-hmm.
Right.
So it's like I be seeing stuff like this on like the
Yeah,
monthly.
you saw it too.
Yeah. But it's like it's just hard for me to like trade, like to actually get in on like
It's not
smaller.
hard. It's not hard. I promise you, it's not hard. Just don't overthink it and look for where money can be. Like this red line is the last down candle before the up move. This black line right here is the 50% on the fib. This is a 50% retracement going from bottom to top because.
And that was the monthly, right? That was on a monthly, the 50% on the monthly.
Yeah, this is a 50% on the monthly. See, 50%.
Oh, but wouldn't that be like a more incentive that it can go down because it has to at least touch the 50?
Yeah, but it did right here. It touched it,
Oh, snap.
but it
Yeah.
bounced off of it. But I think it's gonna break through it because it made equal lows right here to trick people. Like I said, they like to play games with retail traders, so they want to make people think like, oh yeah, we're gonna buy up, and then next thing you know, it starts to fall down. Then people are still looking for buys. You see, there's still buyers right here with these bullish can. The white is the bullish candles, and then here's the wick to make equal lows right here, and now it's gonna sweep it eventually.
So, quick question, like, so since I'm kind of new to trading, um, I know to trade with the trend, but like, should I like do the alignments of every time frame before getting in, like the daily, 4 hour, 1 hour, 15, 5 minute?
Like I will get a list of confirmations before I enter the trade. For example, most of the time when I'm getting in a trade, my chart is already marked up. Like I get up about I get on the charts at least about an hour or two before I enter a trade because I'm waiting for price to get into my area. I'm not looking for trades. Like, I noticed that when I start looking for trades, it just don't go the way I want. So
Do
I
you
don't.
trade in New York?
Hmm?
You trade in New York?
I do, but I'm about to stop. I'm about to start trading in whenever it comes in my area because I feel like I've forced more trades in New York. Like right now, I feel like price is about to start buying up. This giving me this doji candle. So this is like called the inside bar. That's when like this is a large engulfing candle and next to it is a small candle. This right here is the rising star, I believe.
Is
So
that
this,
not? Is that the evening star? Not evening, morning star.
yeah, there we go. Morning star. Snap, I gotta
Oh
bring it.
yeah,
So morning star. So yeah, this is the morning star, and then it's gonna come down and tap probably this area here. So I put this here because this was the last down candle. Yeah, let me see. I usually write on them. This is the last up candle before the down move. So I wanted to see what it was gonna do off of this candle, and it kind of like reversed on it. So I see this right here. So I'm gonna put it right here and see what it does right here. Because this is the last, this is the first start to the up move.
Mm-hmm.
So if it taps this and start moving slow, I'm gonna creep my way down, see how it's getting closer to it. I'm gonna keep going down the time frame because I want to get in on this trade for the buy. And
Like, would this be like a 1, 2, 3 move or?
2, 3. Oh, could be.
Because I don't see like a break of structure anywhere.
This could be a 1, 2, 3 move. And even if it retraces, let me go to the 4 hour because it really dropped on the 4 hour. Even if it retraces, it has to come here.
Mm-hmm.
So I'm gonna keep that right there, and that'll be first take profit. And then I'm gonna put my alert right here.
So are you like is this like your job, like trading?
Not just trading. This right here lets me know that this is gonna be a wick. Right here. I also have an online beauty supply store.
Oh,
So that's why I thought that you were calling. I mean, that's why I thought that you wanted this one-on-one for eBay because I've been, or not eBay, Shopify, because I've been having a lot of Shopify calls.
Mm-hmm.
However, I miss trading. Like I have an FTMO account and I want that to be my main source because we get paid off of using our brain. And I don't know, something about that is just so, that's just amazing to me. You know what I
What?
mean? We acquire a skill that we can get paid off of the way we think.
Yeah.
And the biggest thing, it all boils down to just controlling our emotions. That's it.
Yeah, I want to get an FTMO account too.
Yeah, it's all about risk management, to be honest with you. Like, you're not gonna win all. Well, you may. I'm not gonna tell nobody they're not gonna win all their trades because if you do, more power to you. That's what's up. However, we should go in knowing that this is a chance game. Like if I got in now and I'm like, oh, it's dropping. I'm gonna get in for the sale. It could turn right around. You know.
Mm-hmm.
So you just want to make sure that your risk to reward ratio will always be in your favor. Like I only risk 1% or even less than that with my FTMO account, and my reward is like 5% or even 10%. So I could smack my FTM. I actually did smack my FTMO challenge in one day. Not the first day. It was actually like the last 3 days because I missed the whole week of trading. And I was just like, dang, how could you do that on the FTMO challenge? Like, how could you miss a week of trading? So, but I was just like, I'm not gonna give up. I'm gonna keep going.
Oh,
And
so it took you 3 days to do that? Like, see, when I hear 3 days, I'm thinking like, damn, y'all make it look so.
no,
Y'all make it.
you have a month to do it, but I let the month go by without really trading in anything because I didn't want to force a trade. I didn't see any setups, and I was like, I'm not about to force anything. And then I was really pressured to get the FTMO because it was like if I didn't get the FTMO within that last I think I had like 3 days left in my challenge. If I didn't smack my 10%, then I would have lost that FTMO account. I was like not having it. Mm-mm.
And then I was confused. So they don't mean $10,000 like on that you gain. They talking about like 10%, like 10% everything.
Yeah. So say there's a $10,000 account. So 10% of that would be $1,000. All you need is 10% to get it. And you can't lose more than 5% in one day or 10% in one day. So don't it just doesn't make any sense to over leverage.
Okay, so stick with 1%.
It actually price could still be dropping. Like I said, I'm just looking to see what it's doing.
Did you use NAS to do your FTMO?
I actually was trading the futures because so on FTMO they don't trade like they have US30 and all of that. They don't trade. You can't trade US30 with NAS. I mean with FTMO, you have to trade the US30 futures, like Wall Street 30 futures.
Okay. And I was working on that too, like trading the Wall Street, because I don't know, on mine it said Wall Street, and I was like, I just clicked on it because I thought it was the same thing as U30, and I was like trying to trade that too, but I don't know, I was getting lost.
It's kind of the same, but not really. Like Wall Street 30 and US 30. I read the difference, but you definitely want to make sure that these numbers match up with whatever broker you use. Because for example, let me see, I have two different, this Oanda, and I actually don't use Oanda for my live account. For my Forex, these numbers are not, so I don't use this chart. I have it saved. I see how I put this one. So I have two different ones. This is the Oanda, and this one is like the global something.
Oh, I thought it was good to use the FX one.
It depends on your broker. But this one right here is with my broker, the Global Prime. So this is the one that I use. That's why it looks different, because I had just marked this up like I think this morning. It went right through This imbalance, I believe this imbalance was from the monthly. It is still going. But like I said, I think it's about to turn around right now. It's on its way to see. It's on its way to turn around. But we will.
I have prosperity.
Yeah, I have prosperity FX too. So global prime to me works better with prosperity FX because this one, see how this number, see how it says 12625? This one's
Mm-hmm.
614. See what I mean?
Mm.
It will mess us up. So this one is more this one coincides more with prosperity FX. That's something that you want to know. You also want to know how much you're paying them to enter these trades on their spreads. Some brokers have ridiculously high spreads, and it's like what? But yeah, I've decided that I'm not gonna trade the New York session. No, I just like thought about that. I'm like nah. Because when I was back testing, I noticed that like around this time, around 2 o'clock, 3 o'clock in the morning, and in like 6 o'clock, 7 o'clock, even 10 o'clock in the afternoon, that's when sometimes the banks will make their smooth entries, where you get that like that wick entry on the high and the low.
Okay. So are you saying you're just gonna like play off of whenever it gets your imbalance and point of interest?
Yeah, because when I was back testing, that worked better.
Because I was just thinking in my head like the Asian session, say if price went in that way, but then it hits London, then it just wick down. Then when that take you out.
When you're talking about if it just wicked, yeah, it'll take you out in a wick. However, like I said, sometimes it'll hit. It just messes with people during these sessions, and then when people are done trading, that's when it'll go to the area, the point of entry, wicken it, and then go whatever direction you say it's going to go. But what I'm going to do is just have my alert, and when price hit my area, just pull my trigger and see what happens. Instead of like right now, I'm looking. This can easily be a sell, or it can be a reversal pattern. But if I had already marked my chart up earlier, like from maybe here, I'd be waiting for it to come here, or pulling a trig somewhere in this area on a smaller time frame. Like
So since you have like NAS and U30 and that you trade on those, you trade on a second time frame?
yeah, I enter on the seconds all the time. I do not enter on no, but I only go to the seconds when I'm about to enter. Otherwise, like right now, this is actually probably a good entry point. Let me make sure. See, because they close. See how it filled this imbalance on both sides?
Yeah.
Right here. And this candle closes in 3 minutes and 28 seconds. So let's see how this candle closed and what the next candle does.
Cause I be getting lost on like whether I should buy the second time frame or not, because like when I was trading, I think it was it was one of the leaks. It was on one of his videos, the recent one he just posted, the one he just recorded and posted up on the back office. Like one of the point of interest, like price went down there and he was like working it, but you couldn't really see the break of structure on the 1 minute, so he switched to the 15-second. I was like, damn. So if I were to look on the 1 minute, you know what I'm saying, I would like miss a good amount.
What do you mean?
Like to get in, like, because on the 1 minute in that point of interest, you wouldn't have seen like the break of structure, so he switched down to the 15-second.
It's about to just shoot up. You can watch it on the seconds. Hold on. I just want to see what it does. I like to walk price down. So price is probably not going to come back down here, but we'll see.
Damn, you on the seconds too?
Mm-hmm. Yeah, this is the best place to watch breaker structure. So I go in a second, like for example, see this right here? This purple area is my point of entry. So it gets to that area, I have my alert set, my alert go off, and then I'm like, okay, let's see. As soon as I see that breaker structure in the direction in my bias direction, then I'm pulling the trigger on the retracement.
So like, can I still be like profitable without using this the second time frames?
Yes, yes. Now, this will just help. For example, like my goal is to flip a small account and to make it grow faster. So, second time frame, for example, this is why it's beneficial. Right here, I could enter in at a retracement. I'll wait for it to retrace though, so I'm not going to get in on this. And I can move my stop loss about. No, that's way too much. To about right here. But only wait till after it comes down, you know. But if I was, so I wait for price to come back down before I enter. But I know that if it's bullish, if it's really bullish, it's not going to break this low. So I put my stop loss behind this low, if that makes any sense. But if I go up to the minute, it's still pretty much the same thing.
Okay.
The 3 minute, you barely see it. The 15-minute, you definitely don't see it. So you, for the 15-minute, you're gonna want to put your stop loss here, because you know what I mean. Like you're basically saving money on your risk, because you're like, okay, well, I saw the breaker structure already on the upside. It's definitely going for the buy though. This is probably gonna come at least up to about right here. Feeling half of this imbalance. It's about right here.
And would that be the like 50% or something like that?
The 50% level.